Are you ready to learn about the property market? Then you're in the right place. This is Everything Property by Pivotal Homes, where we connect Australia's best developers, agents, home buyer specialists, wealth creation experts, and property advisors to the people of Australia. Broadcasted from Whitehorse Studios on the Gold Coast. And now, here are your hosts, Hayden Ashton and Tom Egan.
G'day guys, listeners and viewers across the country. Welcome to Everything Property by Pivotal Homes, where we connect Australia's best developers, agents, home buyer specialists, wealth creation experts, and all-round property advisors to the people of Australia. Today's guests are ones we are very, very fortunate to have on the show. They are the co-directors of a progressive nationwide buyers agency. They assist their clients, both homeowners and investors across the country, to make intelligent, educated decisions around property purchasing and investing. They specialize in multiple strategies such as renovation, subdivision, and development, whilst also utilizing creative strategies such as property options and joint ventures. And they have a long list of happy clients, some of which they have helped achieve up to 100% return on their investment in the first year. It gives me great pleasure to welcome Alex Hill and Toby Donelan from Over and Above Property Agents. Welcome, guys.
Thank you so much for having us.
Thank you.
And before we get started, mate, happy birthday.
She's ditched me.
We're going to sing it, actually, aren't we? Yeah, we get the cake. No, just kidding. Look, guys, we're super stoked to have you on today, and thanks so much for taking time out of what I would imagine a very busy schedule to come and chat with us about everything property, as the name suggests. Now, obviously, there's a heap of stuff we can talk about today and some really unique content that probably the listeners and viewers at home haven't heard from us on the show to date. But before we get into that, love to hear your personal stories, both you as well as the company, and all around, give a bit of context as to where you guys come from and what you're up to.
Well, mate, I'll let the boss take that one.
Thanks, Toby. Well, thanks for having us, guys. We're rapt to be here. I guess for Toby and I, it was always going to be property. We just, it was a matter of how and when. And I guess coincidentally, we didn't know each other, but we're both from Wagga Wagga, New South Wales.
Right.
So Tobes and I have been engaged for about 4 years, so in business and in life together, which is always interesting. But at the same time, as I said, it was always going to be property. We just didn't know at the time what the avenue was going to be. And, Toby will tell the story about, we went to dinner with a good mate of ours who is, pretty successful in the property industry. He took us to dinner with our now business partners.
Right.
This is probably coming up nearly 2 years now. And we drove away from that just filled with so much education and information and empowerment, but there didn't seem to be any ulterior motive, which was so great. I remember being in the car on the way home saying to Tobe, there just didn't seem to be a catch. They were like offering up all this, mentorship and just an open door. Anyway, so I guess that really progressed into Tobe essentially, I don't know how to really say it, but I guess he was pounding the pavement day after day whilst still on the tools as a tradesman, to really, I guess, nurture that relationship with these guys. And do you want to pick up from there?
Yeah, no, it was, you did right. It was, we just went out to dinner with some very good friends of ours.
In Wagga Wagga?
No, it
In Brizzy.
we coincidentally grew up 2 k's from each other and never met. So.
Never met each other, wow.
Strange.
There you go.
Yeah, well, I moved when I was 16 and she moved when she was 17. So.
Yeah, right.
But so we went out to dinner and I was hammering a mate of mine saying, how do I get into property development? Because it looks so easy. It's not.
Yeah.
So we had a great dinner with these guys and just kept in contact, and it just turned out to be, well, go and have a chat to this agent and check out this property and so on and so forth. And met you not long after, actually. So
So before property, were you an electrician or
plumber?
Plumber. There you go. Both the same, water and electricity. So closely
exactly
related.
they both go in pipes.
And what about you, Alex? What were you
I've come from a high-end management background. I was in 5-star airlines. I was in 5-star hotels. I did a couple of years in New York as an executive, I guess, nanny and also personal assistant for a high wealth family over there. So a lot of that's sort of been brought across into the company, and I always find it really interesting when people will say, well, how long you been in property? And they need to know all the numbers, and they need to know, you know, what your investment portfolio looks like. And for Toby and I, it's individually, we've both come from areas where our parents have done a fair bit of stuff. You know, I've watched it from a young age through, renovation and development, seeing my parents invest in different areas and diversify their portfolio. Toby's very much the same. And, you know, I don't think when you're young and you're in the back of the car, I don't think you unlearn that stuff, the stuff that you hear.
It's ingrained in you, isn't
absolutely.
it?
You've seen it over a long time.
Yeah, so
definitely.
Over and Above was actually, the brand was born from our 3 co-directors, so Mark, James and Adam, doing joint ventures as individuals. So the brand wasn't the brand at the time. And essentially that's through flipping. And
so they're doing it just for their own personal portfolio type scenarios and realised, well, we're good at this. Let's help other people succeed.
It was completely organic. The guys just were getting asked questions from people who were seeing what they were doing and saying, how do we do it?
Yeah, right.
And then that became a question they asked each other and saying, well, we've got our own education, our own skill sets, and let's try to help other people do it. It was a genuinely organic creation.
Yeah, wow.
Yeah, absolutely. So I guess, you know, that whole flipping space, I always find it quite surprising when people need help in that space because it's something, as we just discussed, that's ingrained in me. I've seen my family do it over time. I feel like I've got a bit of a knack for it. Toby's certainly got an eye for it as well. It's certainly not easy, and we'll touch on that later. But, so that's where, as Toby said, Over and Above, the brand was born as to how we can assist these people who want to do these kind of things, and even not in flipping, just acquiring property successfully. And that's where that was really born from, and has since evolved. And as we were saying, before the show, it's now developed into Over and Above as a buyer's agency, Australia-wide or nationwide. And, our development company, or our projects company, which is Joint Projects and Developments. Yeah, so.
Yeah, awesome.
Exciting.
Man, that's really good context for people at home, and that's going to provide a really good, understanding of where we're at to further this discussion. Now, obviously, we're in such a unique, uncharted time in the world, and even more so in the property industry. And there's it's a constantly evolving market, and in the back of even like government stimulus and incentives, we know that for us, on our point of view, we've been sheltered a bit from, I suppose, the harshness that is the reality of COVID-19 and the market, or the economic turmoil that comes along with such a monumental impact, I suppose.
Definitely.
What are you guys finding out there in terms of your investors' confidence? Are people, what's the mindset of your clients, and even also past clients? How are they feeling and how are they faring? Are they nervous, or are they confident in the decisions that they've made? What's your take?
Look, from my opinion, it's certainly a mixed bag. Me being more heavily involved in the projects and the renovations and things like that, we're seeing a lot more opportunity. But that doesn't mean that it's all easy. It doesn't mean that people are having fire sales for everything. It's not a situation where you're just going to go buy a house of land for $1 and it's all good. There's a lot of opportunity, but there's also the savvy investors out there that are heavily competing for less stock.
Yep.
And that's something that we're competing with as well. There might be less stock on the market, and there might be less buyers in the market, but it doesn't mean that it's still not a competitive place to bid.
Yeah, I've been talking a lot about the equilibrium between supply and demand, and I still believe that right through this, particularly in the markets that we're working within for our clients, which is select, it's very select, that the demand is still outweighing the supply. So, that's what we need to push property prices up. It's when it tips the other way that we start to get into trouble. So there may be less stock on the market, but there are buyers out there, and there may be less investors in the market as well. But the savvy investors know that it's a good time to buy, because if you go in 6 months down the track, or 12 months, because everyone seems to be waiting for these repayment holidays to stop and JobKeeper to stop, and apparently it's all going to go up in smoke. But the thing is that if you wait till all of that calms down, that's when everyone's going to be back in the market. So that's, this whole, I have these conversations every single day as a buyer's agent. Obviously there's lead generation involved in this business, and the conversation is very much about, well, why not now? And why do you want to wait? Tell me the psychology behind you wanting to wait. And just that education piece about exactly what I've just said, that when the masses are back, that's when you risk paying too much.
Yeah, and it's interesting because we've definitely noticed on the new house and land side of things, which is obviously the space that we dominate. Not dominate, but we do. But
killing it.
that we focus on heavily. No, but what we found was COVID March hit and developers pulled back all their stock pipelines. So they were like, okay, well, where any new land releases, any new sites, we're going to put them on ice. And then home builder comes out and it's a bull rush and there's just people going ballistic, taking anything they can. And that pipeline of stock isn't there anymore. So you've got a whole entire greenfield suburbs that would normally have 30, 40, 50 pieces of land at any one point over the last 5 years.
Yeah.
Dried up. And there's still that, especially in Queensland, that demand for home builders the largest in Australia because of the price point, the attractiveness for owner-occs getting into the marketplace. The supplies, even in the greenfield areas, is
so
drying
low.
up.
Yeah,
So
it's
how
up
is
to
that?
6 months of no land supply in some of these estates, where there's always been 12 months of supply to come. There's just 6 months of nothing. So we've got no
So
releases coming.
Complete lull.
Yeah, and if that's happening in greenfield areas, what's happening in some of those blue chip infill areas? Like where there's only a select few splitter block type scenarios, and there's a lineup of 15, 20 people waiting, looking at realestate.com every day for something to come up.
That's
and
right.
that's the competition in the marketplace is people are sitting back and going, well, I actually do have the money. My particular situation is different to X, Y, and Z, and we've got some money and we'd like to invest it. And as Alex said, why people are psychologically looking at going, why now, why not now, why wait, why not do it? And I think the one thing that comes to fruition out of all of that, no matter if it's in your industry or ours, is that there needs to be professional involved. And if you want to make the smart, educated decision, go to the right people.
You got to, don't you?
100%.
You don't go to, you can't navigate through, the ocean without a captain, so to speak. Going, and arguably probably what is the most biggest financial decision of your life. It doesn't make sense to do it alone.
Absolutely.
It doesn't make sense to do it alone, but Australians are conditioned to actually going to the selling agent, and that plain simple balance is you're going to a selling agent for your buying advice.
And they're working for the landlord, not you. That's
absolutely.
Right. Absolutely. And, that's another thing, I guess, that, we explore with clients all the time. Well, where are you getting your information from? What research are you doing? Because we don't just work with first-time investors or property buyers. We also work with experienced investors or property owners. And a lot of those conversations there are, well, I made a pretty horrible decision the first time and I don't want to do that again. So a lot of the time it's a bit of damage control. And, when you unpack that and you sort of figure out, well, where did the idea come to purchase whatever you've already purchased? And I was talking to a gentleman yesterday who was talking about, rental guarantees and, Western Sydney and all sorts of things. And I just explored a few things with him, a few of what I would say without talking down any other sectors, but just about, my viewpoints on that a little bit. And, to really open his eyes, and this gentleman owns 2 student accommodation units and, is experiencing huge challenges with that at the moment.
Yeah, massive.
So you talk about, owning and it's like a home, a house on land, and the element of control that you have with that over being in some of these complexes or some of these things. He was mentioning that it's managed by, it's got a contract that he can't get his own property manager in to just look after it. There's so many of these stories that we come across every single day where people are essentially, they've backed them. It's not anyone else's fault, I don't believe, but they have backed themselves into a bit of a corner. So as I said, it becomes damage control. How can we get this right? How can we make the next one right so that, because why do we get into investment in the first place? It's for an end goal. And what we're always trying to ascertain is, what is that end goal? Because you ask people, well, I want to have a property portfolio, but why? what is it going to allow you to do? It's no good just to be able to go to a Barbie and say, I've got 5 properties if they're all negatively geared and they're you're struggling every single week to keep, food on the table.
Food for the Barbie. Your Barbie's on, but there's
no snags.
And I think I really want, because the buyer's agency service is, from my experience, is not one that's used a lot for everyday Australians when purchasing. So there's probably people watching that maybe not even know what that service is. Tell us about we should go back and just explain that service, because a lot of people, as you said, rely on the person selling the house for the buying advice, opposed to someone who's in their corner, backing them.
I think the stats are that there's something like 50,000 selling agents within Australia, and there's just over 1,000 buying agents.
Wow.
And I always like the term buyer's advocate, because we are advocating for the buyer's best needs. And Alex sort of runs that portion of the company.
Yeah, so I guess to strip it right back, we are exclusively for the buyer, and different buyer's agents structure, their fee structure or what their commissions are or anything like that very differently, depending also on whether they've got product in inverted commas, or
they mean by like they might have some of their own stock or that sort of thing.
Yeah, so there may be BAs out there or buyers agents out there who work very closely with developers. They've got a dozen properties, and there's a system there where they get paid that way as well. For us, we are extremely client focused, so we start with the client and we find the property second.
I was going to say that then would raise a few concerns for me from a buyer's agency point of view. If you do have, I suppose that link to maybe if you're getting a fee for service type model where someone's paying you money, but you're also in the back end,
the double dip.
The double dip recommending, a certain, asset or a certain, block of units or whatever. It's maybe not as productive as what you guys do.
Yeah.
That's where I think the client focus comes into play the most, is because if you and I both had $500,000 to purchase a property, you and I buying the same property does not suit each other's needs. So we need to be completely client focused, because it's about them. It's not about us. We're providing a service to them that suits their particular needs.
Yeah, definitely. So it's a really quite in-depth, long process before we actually even start looking at a property. And as I mentioned earlier, it's about figuring out that first objective, what it's going to mean long-term, because it's not, for us, it's not transactional. And that sounds really silly because property is transactional. But for us, we want to, wherever we come into the journey with the client, whether it's the first purchase or the 10th purchase, we want them to be a client for life, and we want to be part of the experience. We check back in with them, connecting them with the right professionals. And, there'll be times through that portfolio building that they will need to connect with different professionals. They may decide to go into commercial, for example, and we will need to plug in other professionals there to support us through that as well. So, for us, it's not a selfish thing. It's really quite selfless in saying, we just want to educate you and empower you, and it comes from a really honest place. And that's where we're extremely transparent with everything that we do with our clients. So they essentially, to answer your question, that the service is a hand-holding right through the experience. It's understanding your strategy. Mark is incredible at really sort of unpacking those wants and needs. That's our business partner, Mark Heritage. And, stripping it back to what they may already have, what's going to work for their next purchase, what it's going to do for them, how we can make it happen, who we need to bring in to make it happen, brokers and other professionals. Yeah, so it's a step, an end-to-end service. And
And will a client normally come with a brief? Because, some of the time a buyer's agent may get involved when a client says, look, I just can't find what I want. I want, Southport, 4-bed, 2-bath, 2-car or whatever.
Yes.
Or is it more so you guys mix that with actually some strategy whereby it sounds like you're identifying their goals. They don't necessarily have an idea of what's going to get them from A to B in terms of where they are now and where they want to be in terms of whatever their end goal is. So you guys then strategize in relation to what's going to be the ideal property, whether it be, some of these creative strategies that you guys are involved in. Is that am I on the right track there?
Mate, dead set. Perfect. The strategy is the most important word, and following that is crazy important. If you come to someone and say, okay, listen, I've got $500,000 I want to spend, and now what? That's fine. And as Alex said, hand-holding them through that, in implementing the correct professionals, have you got your right solicitor? Brokers are massive. Having a broker in support of an investment property or your first home is absolutely crazy. Don't go to the bank, see a broker. But understanding their wants and needs and their goals, because this first purchase that they, whether it's their 10th or their actual first, is so important to make sure that it sets up the second one.
Yeah.
And whether that's building a duplex or buying an investment property in a holiday location or sticking to the regional areas where we feel that there's so much growth and so much ability to really strengthen any portfolio in those areas. It's understanding what you want, how you want to do it, and we nut it out for you and with you.
Yeah, I think it's key. Every time that you want to purchase a home, too many clients go, this is what I want, but it's when you strip back and go, is that actually what you want? Or you actually have a different goal and that's not going to lead you to it.
Is that what you need or is that what you want?
Yeah, you're overcapitalizing here if you actually want to end up over here. You spend an extra $200,000 we don't need to. Well, let's go a suburb back.
Yes.
But we're going to get to this level. And constantly, I think what we did really well is every time we would sit down with a client, I would spend the first 2 meetings with them actually understanding what they want. What's the goals? How do you want to do it? Okay, what's the strategy in place? And then we stick to that strategy the whole way through.
Yeah.
Then they come back for their second, the third. That's where because each client goes, okay, this is my strategy, I'm 50. This client comes to you, they're 25. This is what we're setting up. Okay, you single or do you have a family? How can you live through this period as well? Because that's going to depend on what their actual costs are, living costs are at the same time, and how aggressive do you want to go? Okay, where do you want to be at 35? Okay, this is where. And a lot of time I find clients just go, I just want to buy a house. It's like, hang on, we need to go back and actually look at that strategy.
We can do that tomorrow, but to do it properly is a different.
Yeah, and I think being in there with them and actually seeing them breaking it down and go, and not only that, having a team of different experts going, okay, we're looking at existing homes, we're looking at projects, developments. Which way do you want to go? That's also a big thing as well, having the right team at the same time to cater to that client. Okay, all right now this will set you up here, but we've actually got another person in the company that specialises in this, which will be stage 2, stage 3.
Absolutely.
Yeah, it's awesome.
Yeah, absolutely. And you do get the client who comes and, I've got a client currently that she lives in Melbourne. She wants to buy on the sunny coast. She knows a fair bit. We have pretty good, transparent conversations where I don't need to educate her per se. It's more about she needs the support on the ground to make it happen. And, yes, there's been some things there about, we very much advocate for positive cash flow. So we're chasing, good yields through the majority of our purchases for our clients because we don't want investment to hinder their current lifestyle or paralyze them from moving forward. So this is something that we talk about a lot with clients. And, I got to a stage with this particular client where I said, tell me the importance of the positive cash flow. Tell me what that means to you. And she said, well, it's not, I don't need the cash flow per se. It's not that I need the $50 or $100 a week. I earn a good income. For me, I don't want this to cost me because I don't want it to impact my serviceability. And the market on the Sunshine Coast is extremely hot at the moment. So we got to the point where I said to her, listen, how about we just strip it back? If I know that this is not going to cost you any money to have this, but we can get closer to the water or closer to your desired locations, but it's not costing you. So I find that max. I find that happy place where that's our max offer, and that's where we tap out unemotionally.
Yep.
And so let's talk about that in terms of your actual buying strategy. So your client, you've identified that, let's say Sunshine Coast. This is what we want. Are you guys making off-market offers to owners? Are you guys rocking up to auctions? How does that work for the people at home? Like, is it a myriad of, it's all different things,
It absolutely is. We have a plethora of different services that we can offer an individual, like an auction-only service or negotiation only for people who just don't feel confident in that space. But realistically, it's all we do is come back to the client about what they need, and we need to do anything within our power to get that. So.
Yeah, absolutely. And, creative strategies, which I think we're going to touch on, there's a few things there. Our professional connections come in very, very handy for off-market opportunities. There's been even opportunities that clients have been plugged into, negotiations we've been in with vendors, that had no intention of coming to market. So it may have just been a stressful situation that we became aware of, that they were sort of open to us helping them through that situation. And, you know, there's been an opportunity there for clients to come in and be the solution there as well. So this was an opportunity that potentially never would have come to market because these people, these current vendors had just found themselves in a position and like we say, paralysed, don't see a way forward. And that's another place that Over and Above really has come from, is providing solutions for vendors as well. Right. So if there's anyone listening that's, you know, in a position where, or they know someone who feels like they're just backed into a corner, whether it's with their mortgage or their personal finances or whatever it is, that is something else that Over and Above explores, where we look at how, and it's not possible in all properties, but we look at how we can plug ourselves or our clients in there to solve their problem. And for a lot of people that probably sounds seedy and it probably sounds under the table and all sorts of things, but the experiences that particularly the boys, our business partners, have had with some of these vendors has been life-changing to be able to solve their problem. When I remember sitting at Zarafas or something in Nerang with Mark, and this poor gentleman, his family had basically ruined his investment property that they were living in, and the whole thing that this gentleman needed was Mark to call the bank on his behalf. Yeah, right. Just to give him some breathing room.
Just to give him some understanding as well. Like I remember that this was a pretty good piece of real estate too if it had been looked after. And the bare block itself, I think, sold for $230,000 with a house that 100% needed demolished, could not live in it. Right. And, you know, that's a pretty good price. And these guys they just needed help. And we made zero money off it. We didn't, you know, it was just about helping them.
Yeah. Yeah. And, you know, some of those stick, some of those don't. But if you feel like you can walk away at the end of the day and say, well, that gentleman on that day, he just didn't know a way forward.
Yeah. So a lot of people don't. You know, it's such a... Being in the industry, we obviously have some sort of idea of what we're doing and how to have those conversations if we were able to find ourselves in a situation where we needed to be proactive in approaching a financier or whatever it may be. But for the average mum and dad, you know, average Joe, they have no idea where to start when it comes to, you know, getting themselves out, because it's a long way. It's a long way out of that, a hole like that when you have absolutely no idea. And a lot of the time, unfortunately, you approach professionals and you may not even have the money to engage someone's service to actually help you. So you've got to do it on your own.
Yeah, that's absolutely right. And, you know, as I said, it's very much solution based. And if you can find a creative way to solve their problem that also solves yours or a client's as well, it really does become a win-win for everyone. Yeah.
Regional markets, Toby, you touched on it just a moment ago. And I really love to have a discussion around that because I think it's very, very interesting. It's something we don't do a lot of, so I want to hear your take on the regional market side of things and why you think, you know, that's a strategy that's very interesting at the moment. And
mate, yeah, absolutely. There's a massive opportunity in regional markets at the moment.
Queensland or around Australia.
Yep, Ipswich's, Toowoomba's, Albury's, Bendigo's, Ballarats, all places that have got pipelines to major cities. Right. And a lot of the stuff that we do at Over and Above is completely data driven, and we've got some fantastic support in that area. And Alex actually would probably be a better person to answer that one. She knows that backwards. So,
well, regional markets, funny. Like when I heard you speak about regional markets, I'm thinking regional, you know. But those areas aren't too bad. I
thought you were talking.
Yeah, I thought we were back up into Mackay again.
I thought you were about to say Rocky.
So on that, no,
there are some affordable properties in those areas.
I don't know, and it's not that we have a problem with those regional towns either, because they do really well. I think like someone young starting off with a portfolio that wants less risk, and just to have, you know, where the market's more stabilised, the rents don't drop significantly, and depending on certain industries. Like I've got mates in, you know, regional towns as well that buy there. It's not that we have a problem with it. It's just that when you're first starting that portfolio, I just find the less risk and more long term, just that state, you know, a lot safer stepping zone.
But the Ipswich's, they're not even really regional, are they? They're almost metropolitan.
It will be a suburb of Brisbane in 5 years.
Yeah, so this is the thing, you know, we generally target areas that have a population of at least sort of 20 or 30,000. Yeah. So we're not talking the little town that's got 1,000 people in a corner shop and a pub. Like we drove through Mangapar the other day and stopped at the pub. There were 3 people in it. I think it was the whole population of the town.
Should have seen the looks.
Anyway,
Oh,
so
mate
On
walks
you.
in. Yeah, no. Alex led the way.
but we're looking at really key fundamentals. So excuse me. So I totally agree with what you're saying there about minimising the risk. I also look at it a little bit differently, where that's exactly what we're doing by going into those places. Firstly, it's affordability factor, so they can get in sooner. Secondly, we're targeting very low vacancy rates. So we're targeting under 3% vacancy rates. And for the listeners, that means that there's huge rental demand. During COVID, those rental vacancy rates have dropped majorly, and
some to zero.
Yeah,
Really?
There's Ray White agencies around the country that are reporting 0% vacancy rates, which is fantastic. A lot of other property managers as well. But when you actually do the data, it might be 0.27% or 0.87. Like it's minimal.
And 3%'s a balanced market is what what I work off. If you're 3%, that's sort of as you say, the equilibrium between supply versus demand.
Yeah. So these, when people are sort of, I guess, a little bit potentially fearful at the moment, to look at those vacancy rates, I see so much confidence in that. I take so much confidence from that, and really achieving great rents. So we're not just looking at an area and saying, oh, it's great because you can buy for $250. We're looking at it through so many fundamentals. We're looking at government spending from a federal, state and local level. We're looking at project pipeline. We're looking at supply, vacancy rates, employment sectors. So looking at those towns or cities, they're mostly cities. We're talking 20, 30, 40, 50,000.
Ipswich, 200?
What's
400?
What's Bendigo got, 100,000 or something? Like it's, these places are not small. So looking at the places that have got multiple employment nodes, so many sectors, and why are people living in these areas? What's drawing them? And to use Bendigo as an example, Mark's a Bendigo boy, and he'll talk about it a lot, that the express trains coming in, where it's going to be something like an hour door to door to Melbourne. So for people growing families, COVID's shown us we can work remotely. You can buy in Bendigo a beautiful home for 400,000-500,000, do it up. You get that beautiful Victorian. It's a bustling little city, and you're an hour from Melbourne.
There's definitely those opportunities. There's some areas like where I have been investing further north, where they're relying on one industry.
Absolutely.
There's not a lot of spending, where you can go to other areas down south. There's places up north as well. It's just managing that risk, seeing a professional going, what is all the facts, rentals, and that's a big thing. If the rent, if anything happens in this location or one of the industries collapse, is there enough? Are people still going to be able to afford that rent?
Look at Townsville.
Are we going to maintain $450 a week, or is it going to drop to $400? Can you afford that?
Yeah.
Okay. When you're a young, 25-year-olds, and depends on the industry and your job security as well. Can you afford, if that property goes vacant for 6 weeks, if someone needs to leave, and can you afford it drop $50 a week?
Yeah.
And that's the stuff that I assess. When you're just looking at those first couple investments, like you said, it's all the research and seeing a professional go, okay, this is a safe investment. If anything goes pear-shaped, we're still going to be okay. If the economy goes down, the rental vacancies are still at 2%. That's why we've looked at this location. But
That's right.
like you said, it's pockets. There's certain pockets in certain areas and suburbs.
Neighbourhoods within suburbs as well.
Yeah, and you've got to have everything around it to go, okay, this will always win. Like I bought in Springfield, but there's a train station just there. It's got a population of 40,000 to go to 100,000, but the supply is always like at 3%, like the rental vacancy, sorry. So there's good key areas, and that's in Ipswich, but there's always good spots that you can identify. And okay, the government's spending so many billions of dollars per year in these areas to create a city. So you're not going to lose. But if you go to a different area, that might not have that backing, and it might be only a difference in 40 grand in price difference. But you know where you'd go and what's safer for the client.
You can also be the exact same distance from a major city, but you're in a different location without the train station, without the employment nodes, without the money being spent in that area, and go, well, hold on, I'm still only 20 Ks or whatever it is from the CBD. Why is my investment not working, but his is, and it's the exact same distance? Well, you've just nailed
there's
it.
all these reasons.
People get caught up a lot on that, don't they? The distance from the CBD, and it really, it's not really relative unless you've got the infrastructure to support that commute, in that location.
The request you get is, okay, I want to buy within 25 kilometres of the CBD. I've got a purchase price of $650. Okay, that's all. That's your brief. If I fit that description, you'll just buy it, and that's where it's like, okay, what are people actually working for? You as a client, or I can just sell your house here. That's pretty easy.
That's right.
Where we break down is, okay, okay, we're identifying this area for its price point, maximising the distance, but with all the right foundations in this suburb.
That's right.
Where you can go to the 3 suburbs over, it's missing all these foundations. It's probably going to be, it might be a good suburb in 5-10 years, but there might be a longer capital growth gain to come.
That's right.
The rents might be cheaper. Can you afford, you might win out of this long term maybe, but can you afford to take an extra $40 less a week in repayments, but this might pay off? There's so many things.
And opportunity cost.
So that 5 to 10 years can be a massive time of growth for a portfolio too. If you get the first property right, and you can buy again 12 months, 2 years later, if you've got 10 years of not doing that, you've hindered yourself.
Yeah, that's right.
And that 10 years, the growth within that, 20 years down the track or 30 years down the track, it's
that compound,
astronomical. That compounding, it's massive.
It's huge. I bought a house when I was 18 years old in Townsville, built a home with stockies, had no idea that's where I was from. You just buy locally, had no idea, no guidance. If you fast forward 10 years later, that property is worth 150,000 less, or maybe even 200 now. And that's I'm 28 now, so 10 years.
Yeah, wow.
But it's just those small, and not saying that that's a bad area, Townsville, but I was uneducated and didn't know what strategy to follow and what product would actually work in Townsville. So now I look back at it and go, okay, that would actually be hindering me, whether you're talking about these positions where, people's incomes drop, the property's worth less. Yeah. How do I get out of that? Like, I sold back then, so I was okay.
Yeah.
Because I sort of seen things coming. But down here, that would hinder my purchase now for opportunities down here.
Yeah.
I couldn't buy, okay, the property's gone down. I've got a loan against it for $500,000. It's worth $350,000. It's now stopping me to move on to my next
very hard
portfolio.
to get out of that, isn't it?
It's
Absolutely.
hard.
We had Mark's had a very good friend of his down south that bought in one infrastructure town, mining town, and it dropped 300,000
overnight,
basically.
That's crazy.
But he had to wear that, and he had to pay that. He had to dip in his pocket to do that. And through buying smart, he's at his third purchase out of that. He's still got that property. It's still negative. It's still in debt, but he's bought other properties to pay his way out of it.
Yeah, right.
And work your way. And that's where you need to see someone, okay, and it comes back to before you buy, what's the strategy? Why are you doing this? Are you buying it for your forever home to be with your partner and kids and you just want to stay long term? Not saying in those regional towns you're concerned, okay, if it drops down 50 to 100 grand, okay, I just want to buy a home, not pay rent. I just want to live there. But what's the actual strategy? Because some of them say that, okay, we don't care about that, 30 years go by, but you should care about that. If you're getting $500,000 loan, if your partner gets a job in 5 years' time somewhere in a state that's a dream come true, you guys want to move and you've got to sell the property for 150 grand less. There's going to be an issue. You're
living a very different life 10 years later in your life, whether it's kids or marriage or just, as you said, job change or whatever.
And and lifestyle too. Like you guys mentioned before, we always say that to our clients. Yes, you can purchase a home, but we want to make sure you can live the lifestyle that you want to live while still having that home.
That's right.
If you can afford 600, we don't need to spend that.
No.
Yeah.
Let's just start with 400. That way you're comfortable. You can still live a lifestyle. You can still have holidays. It's not about buying a property and just losing everything, which a lot of young people do. We see them all the time. As soon as the home builder grant came out, they were like, we have an extra 25 grand to spend on the build, not reduce our loan by 25 grand. I just got all these requests in speccing up the home that's going to add really a lot of the stuff that they were wanting is going to add no benefit to the home and resale at all. It's just all this, shiny little things in the home, aesthetics. It brings no value. It doesn't impact the size of the home.
That's right.
It's size of the block.
Still a 4-bed, 2-bath.
It's still the same thing.
Time.
Yeah,
we've got I've actually, and they wouldn't mind me talking about this, I've got a young couple at the moment. I think they're about 24, and they were buying, or their intention was to buy in Toowoomba and build, and the property that the build was 580. 580, I think. The build alone. And they have the capacity to do it. They've both got great jobs. And this is the path that we were going down, but through some educational Zooms, we're literally under contract at the moment for something probably half the price, positive cash flow. If they needed to move out at any time, move home to their parents, whatever, they're going to be okay. Yeah, positive cash flow now and a stepping stone. The first call I had with them was, do you have any desire to have an investment portfolio? Let's look beyond this home that you want to build a family in. And now they're really thinking about that. They're really talking about that. We'll just be in this one while we have this baby, and then we'll buy another one and we'll rent this one out. And you've opened their eyes to something. And I haven't even spent that much time with these guys to to really unpack what that looks like, but just the empowerment to even think about it and what it could do for their futures. It's, at 24.
It's huge. It's huge getting that right step.
I wish I could have afforded a 500 and something build when I was
At 24, yeah. Well, that'd be nice.
And that might not last forever, because they could be an industry that they might want to change. Like, you're a tradesman, you want to go into a different industry. Can I afford to go from 200,000 to 60,000 to start something new for the next 2 years? If we buy that property, no, we can't. And that's where some people go, okay, I'm doing a job that I hate, but I have to keep serving this for my family, servicing this loan that nobody actually wants.
What does that do for your mental capacity in 5 years, 10 years' time, when you're literally slaving away because you purchased a property that made you stay in a job that you don't like? And
we were also concerned there as well, and we're starting to dig quite deep when we sort of changed strategy, that it was a complete over-capitalising, 580.
You're the most expensive house in Toowoomba.
That's right. Exactly.
Record breaking.
it did look pretty bloody good.
It looked amazing. It's absolutely beautiful. But you start looking at it and saying, so if they go to resell this thing, it's got to be $1 million?
Yeah, right.
What's the comparable sales here? It's just, you're not going to get that.
Yeah.
Yeah.
Well,
that's a shot.
Hey, let's talk creative strategies. Because that's really interesting and something different to what our listeners and viewers have been exposed to before. So there's multiple strategies you guys can implement based on whatever the strategy is that you're going to run with that client. Let's chat first of all renovation, because that's something that has its own complexities when it comes to it, and a lot of, from us on a builder's point of view, we don't do renovations. It's not our bag, but there's certainly people that obviously do them and benefit and do quite well out of them. Tell us about the renovation side.
Well, where would you like to start?
Maybe even start by, I think, the identifying part, because I think many people want to renovate, but they're like, what type of home, what type of product versus an old Queensland versus a little brick.
What to look out for?
What's the difference? Because that's probably what the problem starting off with.
To start with a bit of background on me, is I did plumbing as an apprentice and did that trade for about 10 or 15 years, and then moved into just bouncing around in jobs, whether it was driving trucks and excavators or doing high voltage electrical work, and ended up in high-end carpentry in Broadbeach. So my skill set is very broad, but with implementing that skill set into renovations has been fantastic for me. But when it comes to identifying the properties, that's more of my role than being on the tools.
Yeah.
I'm actually rarely on the tools.
Yeah, I can imagine.
I have been the past couple of months, and the aches and the pains of me. But moving into the actual identification space has been crazy. It's every single house is different, has its own merits. You talk about a high set home in the more affordable areas, they're same configuration. Some are built in, some aren't, and there's ways to maximise that, and there's ways not. There's ways to burn money on those, and there's ways not. But when it comes to identifying, the number one thing that I think needs to be done from everybody's point of view is include all the costs. Exit costs, entry costs, your stamps, your legals, your interest on your loan for the whole
agent fees. All that sort of
if
stuff.
someone says that they bought a house for $300,000, they spent $100 on it and they sold it for $500. That's not profitable.
Yeah, that's right.
That $100,000 is gone, and people don't. I think pride gets in the way. I think that making decisions emotionally gets in the way. If someone's going to purchase a property and not realistically run all the numbers in completely unemotional fashion and say, I don't care about this house emotionally, I do financially, then that's a massive step in the right direction.
It's like going to the casino, isn't it? Property for Australians, you tell all your wins, but you don't tell your losses. And so, when you spend 300, you buy it for 300, you spend 100. There's $100,000 worth of cost, but you're telling everyone you walk away with 100.
Yeah, absolutely. Exactly. And we're all aware of the amount of shows and things like that make it look so easy. And we get connected with or a lot of inquiry from people from a lot of like the property group, education spaces. And Toby and I, along with all of our business partners, have all gone through different courses like that. And I remember sitting in a room one day here on the Gold Coast and working the numbers out that were on a slide at an event we were at. And Toby and I sat there and worked out those numbers that were claiming whatever it was, 60,000 net profit or profit, sorry, not net profit, profit.
Yeah, right.
And, you know, I sit there and I worked out the numbers backwards whilst the presenter was talking, and I looked at him and I said, there's about $5,000 in it.
Yeah, right.
You know, so it's all this, I believe, false hope that A, that it's easy, B, that it's extremely profitable, and C, that you don't particularly need to do much work. Now, you know, James, who started over and above with the company along with the boys, James has put himself in some scenarios where you wouldn't let your dog sleep in some of these houses, and he would go out there and sleep in a swag for 6 weeks and do this reno 24 hours a day, and people aren't prepared to do that. And that's what he did because he knew that's what needed to happen for it to be profitable.
And that commitment is not obviously everyone's cup of tea, to be
No.
sleeping in a swag in Oberon, for example, the base of the mountains in freezing cold conditions. But
With
that
termites all through your house.
Oh, there's worse than termites. That's easy.
That commitment's not for everybody, but for the nuts and bolts mums and dads out there who are going, okay, I've actually got a bit of money, I think that I can renovate a house. I would just say realistically put all your costs involved.
Yeah.
For me personally, I run feasibilities. Alex helps me with spreadsheets, and we just literally put everything into it. And I'm at a place now where I can do it in my head pretty quickly.
Yeah.
If I see an opportunity on the table, I know what a kitchen's going to cost, I know what a bathroom's going to cost, I know what my time's going to cost, and I know what we want to make at the end of it. And for us, we have a not greedy goal at all. We say we want to make X on the back end of our renovations, and if the feasibilities say that stacks up, that gives us a buffer to say, okay, if we make a little bit less, that's acceptable. If we make a little bit more, that's obviously.
And you're
great.
obviously doing those fees with very conservative numbers, so that if
Really?
costs do, you know, go up or whatnot, there's a contingency.
Yeah.
Yeah,
Yep.
we've got a renovation on the go at the moment that I'm thankfully taking a step away from today.
Oh, right. Is that the one in Thaguna?
Yeah, it is. It is. It's a beautiful house. It's going to be phenomenal.
Yeah,
But
right.
we bought that under market, and with that particular property, I'm at the moment on target time wise, and I'm at the moment on target budget wise.
Yeah, right.
Perfect example being with the conservative numbers. We had we didn't realise this, but the sewer main was broken.
Right.
So we've literally dug all that up and fixed that yesterday. But that $1,000 of cost to fix that was in the buffer. It was in the contingency. That soft number saying, okay, I think the renovation is going to be X. I need to allow Y for that in case something like that happens. This was a termite damaged house. The reason we bought it under market, I've had to fix all of that. You don't know where that goes in the walls, so you have to again allow a little bit extra for that.
And so your end goal with that property, obviously you've bought well, you bought it well, you've got a strategy there to renovate. Do you hold or do you sell and realise?
We sell.
Sell. Yeah, okay.
Yep.
Realise that profit, realise the capital, and use that to then go into further projects.
Which is what makes probably our community see it as viable. And we need to strip that back and be very transparent and very raw about how long that property took to identify amongst the hundreds that we ran reverse fesos on. That's, you know, running those reverse engineering those feasibilities to understand what your maximum purchase price is and being extremely conservative with what it can sell for, as well as the days on market for that area, because you know, it'll eat into your profit really quickly if that thing's sitting on the market for 236 days.
Yeah.
Yeah, those holding costs go through the roof then.
Yeah, right.
Yeah, and you
Well,
know,
it's just your profit loss. That's right.
absolutely.
Yeah.
And, you know, we're not just talking about interest then, but, you know, we stage all our properties. So we would, you know, advocate for that for our clients if they were to do so as well. So all of a sudden you're paying extra every week for staging and it also, again, it's the opportunity cost. So what are you missing out from doing in the meantime? And when, you know, I've recently been talking about this with clients who want to adopt this strategy about, you know, I'll give them a scenario where there's capital growth and positive cash flow in an area, and we'll weigh it up. And, you know, these clients might have, for example, a net 20 grand profit margin that they want to achieve. You know, it's a mum and dad flipper sort of thing, and it's just like a little stepping stone to get started. When you can look at capital growth and positive cash flow and look at your return on investment and you're still holding the asset on the other end, it becomes a little bit clearer that is a far safer and secure option. And the reality was that one particular lady said to me, I don't actually want to renovate. I just need the chunk money. My strategist is telling me I need the chunk money. And we understand that that is strategy. We totally understand that. But when you're not holding anything at the end, and it's a huge gamble, it's a huge risk. And, so we've really got to unpack that with them to have them understand all of those factors before they just jump in both feet.
And flipping's, as I mentioned earlier, is not as easy as everyone thinks it is it? There's so much risk involved with it, and
massive amount.
And then even timing in the market.
Yeah, right. Exactly. And
you said you got a project for 6 months. Timing of the market might not be what you projected.
Look
it
at
to
the
be.
6 months ago.
And that's we are literally in our third week of this project, and it'll be finished by the end of next week, midweek after at the latest. And that means that we've got another 4.5, 5 months to have the property settled, not sold, bought, renovated, sold, settled, cash in the bank in that 6 month period.
Yeah.
And that's really interesting, because I think it's important to buy and sell in the same market, really, isn't it? Because if you're buying in December last year, the market is totally different to what it is right now. So there's so many variables in terms of, the two ends may not meet. So being able to turn those projects around quickly, buying, selling, and then buying again in the same market is very, very important.
Absolutely. Yeah. It's no different of a process to a build, but there's a lot more ifs and buts and maybes on this side of the fence, and that comes with the territory. But we can also have ours done and finished and sold and in a different capacity than the builds can be done, but the product's very different, and that's a challenge. We are in different areas, we are in established places, and it's an interesting space to work in. I love it. Like, I really, really enjoy it, and that's that creativity that you've sort of touched on earlier is super important in my role, because the purchase price does not always get deals done. This particular deal, we were in a multiple offer situation, and we were exceptionally close on numbers, but the selling agent was quite clear. He said, we don't have finance issues. We're not going to the bank for money. We've got private money. And so for the bank to say, okay, we'll take that over someone saying, oh, cool, I've got a little bit more than this guy, but I need to go speak to the bank and get that.
Subject to finance.
Yeah.
Yeah. So we really, I want to be very clear there that this is very much about the flipping strategy. We are huge advocates for the value add strategy. So where you're adding value to the property for a long-term hold.
Long-term, yeah.
And the sooner that a buyer can do that to the property and recognise the compound effect of that manufactured growth, the one thing that you can control, along with capital growth.
And sometimes it's as easy as a lick of paint, isn't it? And some carpets, and the difference that makes is phenomenal.
And even increasing yields, so then we're increasing cash flow. So it then becomes, the double whammy. We're getting increased rent, that cash flow position is really quite strong, but then we've also increase the value of the property, ready for the capital growth to take hold on that new value. And then, so what happens then in 12 months or 24 months, whenever it is, that we can leverage some equity to then go and buy again.
Yeah.
So this is the building, the stepping stones.
That value adds massive for our clients as well, because it can set them on a whole different trajectory. We bought for a couple that, if we were able to unpack their story, they have, from where they started to where they've ended up now, is worlds apart from where they thought they would be. They had close to $1 million purchase on one property in their neck of the woods, and then we've sort of gone into a regional area with them with a property that has value add potential. Now, this particular property, they can add a bedroom and bathroom underneath the roof space with very little work to be done. A bathroom can be done in the laundry because it's massive, so there's already plumbing there. One wall up to add a bedroom, and that then turns a 3-bed, 1-bath into a 4-bed, 2-bath in an established area, in a high-growth area.
Yeah, wow.
And that yield just goes up, and then the value of the property goes up, and they've bought it for X, and then all of a sudden they've spent this little bit on it, and they're at Y very quickly.
And, the situation there was that they were going to spend their whole borrowing capacity on one property in a Brisbane, and, we unpacked the numbers, the cash flow, the capital growth projections by buying two, and we're about to purchase their second one for them. So diversifying that portfolio, having 2 properties in 2 separate towns, both achieving positive cash flow, not impacting lifestyle, which was the biggest thing that they said to us the first time we met with them. Love to travel, albeit that we can't really do that at the moment, but they just didn't want that negative cash flow position. So this again, it all comes down to strategy.
And are you guys handling and assisting with the whole council approval process of renovations and value adding in that as well?
For the company, for joint, we absolutely do it all
Yep.
ourselves. That's obviously because
Yep.
that's part of our business,
Yep.
and that is the main core side of the business, is doing the renovations and splitters and all that sort of thing. But for our clients, we can absolutely help them. And we do hold their hand through every scenario, but at some point the service has to be, okay, this is to purchase a property, and to do anything else, we can guide you through that in any capacity. So we put our hand up to help.
How much help do you need?
Yeah.
Exactly.
Yeah.
We've got clients that are a group of people that have got together, pulled their money, and they've gone, okay, so we've invested in your projects. We'd now like to invest in our own project, but we like the way you do it. Can you help us through that? And so we've COVID hit right in the middle of their purchasing process. They've actually bought a buy and hold together. That they've just done the value add process to that property, and as a group, they've bought it, flipped it without selling it, and held it. So the renovations added the value, added the yield, and everything. And James was down there doing the whole lot with them. So.
And you guys actually do JVs with your clients as well, don't you? You sometimes highlight opportunities and get involved on a JV venture.
Yeah, so I guess that sort of digresses to the problem solving part of the conversation we had earlier, where connections will be made with vendors, and often it's not always to solve a significant problem, but generally they need to sell for some reason, and that's where the JV becomes very strong, because obviously there's minimal holding costs, there's minimal entry and exit costs in that, and Toby explores joint ventures on a regular basis with vendors and agents.
It's very indicative of the times at the moment. Some people have got assets and some people have got cash, and not a great deal of people have got both. If you have an asset base that you can leverage and you have the cash, you're off.
Yeah, that's right.
A little bit of guidance, and you can the roofs there's no ceiling for it. But a lot of, like, I personally have got an asset that I can leverage quite easily with one of our investment properties, and if I had a money partner for this, I can do that. If I did it myself, I could do this. And, it just opens up a different avenue of investing in a different way for people to do it safely. And someone say, listen, I'm a high income earner, but I have no assets. I've never been in that life. I've lived in the city. I haven't invested. For them to go, what do I do? I don't have the leverage behind me to say I can do this with my equity in a property, because I don't have that property.
So you'll partner clients together. Sometimes where you'll see, okay, for example, you have cash, you have assets. Let's meet up and see where you guys can go together. Or
it's funny that it's not quite like that. It's not that simple as saying, okay, we have an engaged client that we're going to do this for. Our engaged clients through very much a service for them. So we work with them. However, just in our general relationships, it's more of that saying, oh, hey, Aidan, I know you've got this land over here. Would you like someone to pay for that build? And then, it's like, yeah, cool, we can do that in builder's terms or something.
Yeah,
like that.
right, okay. Yeah, interesting. Yeah, awesome. And so, look, we've got to start to wrap things up, but where do you see the market heading now? Obviously, there's so many theories and people all have, as Australians, love to have their 2 cents on where, the market's heading. What do you guys think? Where are we at?
I'm very optimistic, and I question sometimes whether I'm naive. But I'm extremely optimistic because I'm out on the ground and I'm seeing what's happening currently. Do I think that there may be some months there of added stock to the market? Absolutely. But it's just really, I believe it's going to depend on the area. It's going to depend on the economies, the employment nodes in those areas. And this is, another just a talk about regional, where there's many of these places, they're not impacted by, for example, hospitality and tourism. Okay, so many of these economies have continued. Sure, the local pubs aren't open and the restaurants and things like that, but the other industries, these guys have still been going to work in a lot of these areas. So do I see that there's going to be, huge stress on the property market in those areas? I don't. And I think what we're seeing right now is that there are 100% buyers in the market, and we talked about this at the top of the call. That essentially, if that supply and demand remains even or some form of level, I think we're going to be good.
And I think even to date, Australian property market has proven why it's Australia's number one asset class. Like what are we now? Probably 4 or 5 months into this whole pandemic and
About to start again.
and we're still, but we haven't seen the arse fall out of it like everyone's seen, and
That's the thing.
vacancy rates are still low. Rental prices aren't coming down dramatically, and things are still.
That's
and there's no
right.
stock on the market. People are holding, and people will continue to hold, provided that you're in those areas, in good areas where they're, high owner occupier ratios and all that. I think there'll be some challenges in maybe highly investment dominated areas where people look to maybe sacrifice some of their investment properties to keep maybe their principal place of residence and that sort of thing. But you should be avoiding those areas with the help of expert in the first place.
Uneducated normally.
Yeah, I think we'll see potentially, and I think we're seeing it now, an influx in apartments and units, particularly in tourism areas, like I was telling you earlier about the student accommodation, those sorts of things, and also potentially on the higher end of the scale, because as, industries struggle potentially and employment has been laid off, those people that have maxed themselves out into expensive properties and they're down to one income, that's where we might see some struggling, I believe. And also, if they happen to have those properties as investment properties, it's a lot. You're not appealing to the masses, are you? No. So if you've got a property that, you need $1,000 a week rent to keep that afloat, that's a big sting to your back pocket if that's empty for a significant amount of time. So that's where I see it. And that's why affordable markets are so appealing to us, because if it's not COVID, it's likely that it would be something else.
There's something else,
COVID to me is very indicative of why buying safe is such a good idea. To help you get through these times, as opposed to hinder you.
And then you can come out the other end and have more buying opportunities. And that I feel that every time you just buy safe in the right area, just don't overexpose yourself and you'll be okay.
That's right.
But a lot of the time, everyone just wants to keep scaling up to the most expensive property. It's like you said, you split it to two purchases instead of one high-end property. The client is about to purchase their second. So they've got two properties that are more affordable for the masses.
That's
in
exactly
safe
right.
areas. Yeah, it's a lot easier at that point.
I think that getting rich quick is everybody's go-to, but building wealth properly and slowly and safely, I think, is the only way to go.
Yeah, and in 10 years' time, it'll go by and the client will be on their fourth property.
Yep.
But for good properties, not two that are overexposed that actually aren't making any money.
That's right.
And then every now and then they have to chip $150 off the rent per week just to try and get it out there, which happens in the higher...
Air conditioner will go on one property and all of a sudden it's $2,000 out of their back pocket.
The higher end market, that's what you're unfortunately got to deal with sometimes.
That's right. But so it all comes down to your risk profile as well. It's all very, very, very case specific, with regards to your employment and things like that. But there is uncertainty. We're not, we're not here to deny that. We understand that for different areas as well, there's additional struggle happening. But, we want to support people if they're in the position to do something now, that they put themselves in a position that it's not going to hinder them into the future if something like this was to happen again.
Yeah, I think that's really, really important. Guys, how do people get in touch with you guys? What's the best way?
Yeah, sure. So we have a private Facebook group called the Australian Property Investing Hub. We get professionals in there, past clients. We educate and empower, so they can jump on and join that group. We also have our website, overandabove.com.au. Toby and I are Gold Coasters. The boys are Victorians. We're extremely accessible. Yeah, and
Zooms, face to face, whatever.
Absolutely.
Yeah, awesome. Guys, I can't thank you enough for coming on. Toby, happy birthday again.
Thank you.
Thank you so much for having us.
I'm still waiting for my cake.
Yeah, I said that on the way. I said we should get him a cake and bring it on. So I'm like, nah, mate, no, that's terrible.
I thought that was a bit weird.
Guys, thanks so much for chatting everything property. It's been an absolute pleasure to have you on. As mentioned, guys, feel free to jump onto the website, their Facebook pages, and get in contact with them. Until next time, we'll chat to you soon. Thanks very much.
Thanks so much. Thank you.